It's our final market update for the year, and it's the 19th of December. Now, talking with the industry members yesterday at lunch, and across the entire market, it's a very similar story, and that is that the activity and that the number of people out there buying and selling and transacting has dramatically increased over the last probably 3 months, but more noticeably in the last 6 weeks. So leading into Christmas itself, there's been an enormous amount of you out there buying properties and actually doing the business, as opposed to looking and thinking about it. So congratulations to that. People must have really registered that now is the time. The other thing is a lot of talk in the papers about a 2% interest rate at the end of next year. So there's a sense that the rates could still be coming down, and the stimulus that's created through these dropping interest rates flows on, and we've found it's been 4 to 6 weeks after the drop that we start to see the actual buying and selling of property. So people maybe take a little bit of time to say now's the time to do it, and then by the time they actually purchase, it's 4 to 6 weeks. So I think next year is going to be pretty full on. There's a great shortage of stock, and the latest RP data report shows that South Australia's stock level has gone from 3,213 properties advertised from 4,117 last year. That says to me that the stock is getting scarcer, in other words, less properties available, less choice. That'll start to really put the pressure on the buyers because there'll be fewer homes to look at. So it's got all the symptoms and all of the ingredients now for a very strong market and very much more in balance next year. Now, just to give you some, if you like, some figures that are conflicting with that, the auction clearance rate this week was 29.9%, which is down. I'm not concerned about that because what I'm finding, it may not sell at auction, but those properties do tend to sell within the week following the auction, and we're not finding any difficulty at all selling properties just at the moment. The number of the first home buyers that have also entered the market is indicative through the commitments to finance, and that's up 9.8%. That says to me that the bottom of the market, the feeder into the market, the first home buyers are active again. They're up 10%. That means that the rest of the market will get a flow-on effect. Now, what happened with the stimulus package 2 years ago is that all of the buyers, the first home buyers, basically pre-bought, and we said at the time, we think it's taking between 1 and 2 years of worth of buyers out of the market that needed to regenerate. That's happened, and now we're starting to see the outcome of that. So I'm quite bullish about next year. So that wraps up our market report for the year.